Hi guys, short video on Tesla because people are starting to lock in profits, I notice. But I think it's way too soon for that. And this is a good example where, yeah, hodling, to hold and to ride a bull market is really what you need to do. But typically at the beginning of such a move, people don't do that because they've been going sideways so long. They're happy to finally sit on a profit, and so um, they lock in profits already, and then newcomers who have been smart to buy low here are very happy to have 100% profit in half a year or so, and also want to lock in profits. And people that have been believing a lot in the stock and have been overexposed themselves suddenly are going to a high exposure here. Let's say they've invested a half their portfolio, suddenly it doubles, and they are at like 70-80% exposure, and they want to lock in profits too. But yeah, I've learned that in crypto, that you really should not do that at the early stages because yeah, it's just a big loss of opportunity later on. Huh? And you have to look at past performance to get an idea of what the potential is of something. In case of Tesla, we saw one cycle before, huh? And it then folded basically from about $30 here to about $300, huh? So where are we now? Here, huh? It went sideways a long time here too, huh? How big is this move? If you compare it with this one, where are we? Well, it's just a little bit higher than the sideways movement, huh? It was around 300 sideways moved, but now at 500. That's the same as being here at 30, and now you're at 50. Yeah, voila. This is where we are with Tesla. Time to sell? You can do that, but prepare yourself to see it go up from 500 to 1000 and at an even faster pace. I likely, not certainly, but likely, because this is the pattern in the past. You see that the move from 30 to 50 went a little bit was a shallower move than the move from $50 to $100. That was just straight up. So the same can happen here. We're at $500. It can go from 500 to 1000 even faster than it went from 300 to 500. Huh? And then people take some profits. That would be around 1000 then. A little sideways movement. But all those that took profits there very quickly, the next few months, see it go from 1000 to 2000. That's what happened here. And only then you have a serious correction. Here it was from 200 to 130. That would be like from 2000 to 1300. This is the first correction. Like that's what happened in the past. And then you can, even if you timed it here and you sold at the absolute top, you're a genius. You didn't sell at $500. No, you didn't sell at $1,000. No, you sold actually at the actual top of $1,800. So you think you're an absolute genius because it drops from $1,800 to $1,200, and you think like, woohoo! But only like a couple months later, it goes from $1,200 to $2,400. You sold at $1,800. How much? Half a year later, it's at $2,400. So that's, and then let's say you sold at the absolute top here at $2,400. Oh, and it corrects from $2,400 to $1,800. You say like, I'm a genius, eh? Yeah, okay. Well, half a year later, it goes to a new peak of $2,400 to $2,800. Huh? And this is actually the point where you are a genius if you would sell at the top, because it will take many years to breach that. Huh? But that's the first point. So you see, like, who does that? Nobody does that. And that's why you shouldn't be selling now, huh? Because it is very likely to go up to above 1,000 to 2,000, $3,000 in only half a year's time from here. And yeah, when do you sell? You just don't sell. You keep it for another year and you see where prices are then. and then you can start looking in profits. And there is no rush because it will go sideways. You won't go back to these valuations ever again. Once you go to $1,000 and then to $2,000, you will never see $1,000 again. So the longer you hold, the more likely it is that you will be able to sell at a higher price. And there's no rush because once you reach a new plateau, it goes sideways for a long time. And then you can sell at any time. It will be a lot higher than selling early here because you're afraid that it might correct, or because you're an opportunist and you think that you can like time tops and then buy back. That will very likely fail. Because you really can't predict where the actual temporary top is, how deep the temporary correction will go. This is very hard to predict, and much more likely is that the price just runs away from you at whatever point you sell and you want to buy back in. The price runs away from you, and you miss out on a an extra 2x to 3x multiplier because you try to time it. So that's the right strategy. Not sure what else I can say about that. Yeah, you could say that. Yeah, but we're at much larger market caps here. So why would you expect similar growth rates as at the early stages? Well, because actually, yes, the market cap's a lot higher, but the growth in revenues has been consistently high. And the growth in production and all that has been, yes, it had been slowing down a little bit, but it's still extremely spectacular. It's very comparable to the early days, which is extraordinary. Actually, that's not true. For this year, for the first time, the past year 2019, revenues have gone down for Tesla. This is surprising to me. That's really actually not good. Um, but typically, stock market valuations lag reality. And that's what we see now. When it was seriously overvalued, having this information is always doubling in revenue, almost. It's about 90% growth per year compounded since the start. But this is a fallback in 2019 of revenues. So that's not good. Gross profits also down 2019 compared to 2018. And operating income a bit about the same, negative for 2019. That's an estimate, but it's probably pretty close. So this is Hypercharts, very good website, very good charts. That's not because it sold less cars, it's because it sold much more of the cheap cars. If you look at revenue, the amount of vehicles delivered in 2019 is actually a lot higher than 2018. 250k versus 370k. No, in total, 360k. So it did deliver and produced a lot more cars in 2019, but actual revenues went down a lot because that's Model 3 versions who are a lot cheaper, like 50k. You can start at 40k to buy that car, but the cars like Model X and Model S, these are 100k cars, and even more. Model X is like 120k. But you see, it sold a lot less cars of Model X and Model S the past year. It's almost, it's like 30% drop. 30 to 40% drop in the amount of those vehicles sold, and that of course causes the revenues to take a big hit. But still, I think even though revenues go down, that's of course bad, but I don't think this will have a negative effect on the growth story of the stock because well, next year, 2020, very likely the revenues will go up a lot again, exceeding this by a big leap. The previous high of 22 billion revenues next year 2020, and that will already start with quarter one because they just opened the factory in China, and they are actually already producing and delivering cars from the first day of the year. So quarter one results will show that revenues are again went up a lot, huh? Because yeah, I mean that's another factory pumping out a lot of cars for very good prices and also very good margins, gross margins. Um, if you look at the market value of Tesla, um, that's about 80 billion at current valuations. Huh? It's now as valuable as Ford and GM combined. Huh? But yeah, I think that you should actually not even compare it with those companies because those companies are actually at the brink of bankruptcy. Because they don't grow actually in amount of cars sold, they actually go down in amount of cars sold. They are in serious financial trouble actually. But here 95 billion. Huh? You should compare this with a stock like Amazon or Apple, a stock that's really like taking over the market. Amazon took over the retail online retail market, and Apple took over the cell phone market, huh? And Tesla is taking over the car market, huh? And because it succeeds, it does even better than Apple, for example, because it succeeds in keeping its market share. Apple always lost market share every year from the start. Not the case with Tesla. Huh? In the EV market, it's succeeding in keeping its market share. So, and it's just like so far ahead of the competition that it's just, yeah. Yeah, this is the chart I was looking for. So Tesla, its market share of the total market worldwide of EVs, electrical vehicles, fully electric, not hybrids, is 18% in 2013. It's still 70% in 2018. So it's really succeeding in keeping its market share. It was a drop here in 2017, but overall, it's succeeding in keeping its market share, which is a spectacular performance because, for example, if you look at Apple, from the smartphones, which was a new market also, it had 100% of the market at the start. It invented it. But you see an immediate drop to 80%, 60, 40, 20. Already like 5 years later, it only has 20% of the market left. Huh? Yeah, and it's very similar because smartphones replaced the cell phones from before, huh? And similar EVs replace gasoline cars. Huh? So it's basically a replacement of the market, and it's not easy to keep your market share. And actually, Apple did very well because even though it lost its market share, it actually kept the its piece of the profits. Like it was by far, it continued to be an extremely profitable company. So it lost 80% of the market, but that 80% of the market were the cheap smartphones. The expensive smartphones, Apple continued to sell, and so the huge profit margins stayed with Apple despite it lost most of its the market. It actually did not lose most of the profits. It kept that. Huh? That's why it's also the biggest company in the world today. But this is important because Tesla is doing both. It keeps its market share and it also keeps the I don't have a chart on that, but the profits, the gross profits that it makes is also huge compared to the competition. Because yeah, sometimes you see like competitors and then usually the old school guys um, launching an EV on the market. But okay, it's a lot cheaper than a Tesla, but there is no profit in whatsoever for them. So they're able to push out vehicles, but it's really bad business for them. Huh? That's why you see that these cars are also then dropped by these car auto manufacturers, because yeah, it's just not so interesting for them. They make much better profits on their gasoline cars than on a new EV car. But yeah, we're at 100 billion market cap now, and going to say $1,000 and $2,000 will bring it to about 400 billion market cap, and that's of course way too high for the amount of revenue that and gross margin that Tesla is making today. It's actually a joke, huh? Because the revenues just went down from 20 billion to 17 billion, and the company is valued at, if this would happen, goes to $1,000 is valued like at 300 billion or 400 billion, like almost it's 10 times higher than its revenues. So that's crazy. Huh? But well, this is exactly what happened in the past too. Revenues here, you can look it up. For example, in 2012, 2013, what were the revenues here? Eh? That's how much is that? 13. This is 5 billion, 7 billion, 4 billion, 3 billion. The revenue 3 billion, 2 billion. So it was 2 billion and 3 billion. No, it was in 2012. It was 400 million and 2 billion. So that was when the price was around $30. Year 2012, it makes about 4 billion. Sorry, 400 million. 2013, it makes about 2 billion. So you see a strong growth here in revenues from, let's say, 500 million to 2 billion in 1 year. That's great. But what's the value of the company here? So they were about 100 million shares outstanding, 110 million shares in 2012, 2013, times the value per share 30, that is 3 billion. Huh? So the total market cap was around 3 billion, for example, in 2010, 2011, 2012, about 3 billion. But the revenues were like, had to start even. It was 400 million, and 2 billion. So it was already valued, for example, in 2011 at 3 billion. But the revenues, I don't know how much it was then, it was probably maybe 100 million. And in 2012, it was also valued at 3 billion. The revenues were only 400 million. So that's also about 10 times lower that the revenues were. So the valuation of the company can really be ahead of actual sales numbers, huh? For good reason, huh? Because the profits uh, like are making money in the investment markets is not easy, because often the market is front running reality. If it looks good the future, the market will front run it, as you see in crypto also, and can go up a lot in value before the actual adoption is there. But the inverse can also happen. So you also want to keep a good eye on the fundamentals, because it can also really like collapse a lot the stock market, even though the actual sales numbers don't look bad yet, but the market can see that they will really become very bad, and that's what you see with the competitors. Not yet; they are still valued higher for GM, but I think you will see the inverse happen there. Actually, that you see the market value of these companies drop a lot, even though the sales numbers are still acceptable. But the market can see that there's going to be defaults. There, many of them are going to go broke. You also need to look at market sentiment. It's very important, and it's what I do often. I read these forums, and for example, hodling is a popular term from the crypto world. But are people saying that in a Tesla world, hodl, hodl? No, no. Huh? People are not spreading this investment philosophy. Um, yeah, and that means it's too soon. Also, it's only when everybody agrees, like, no, no, don't sell it, keep it for the long term. Huh? And everybody agrees on that. Um, then you want to, like, that's the market sentiment where, well, you're soon going to see a turnaround um, because there are not many sellers at that moment. Everybody is just buying or hodling. That's why the price is going up so much, and there is a very high buy pressure and very low sell pressure. Typically, when everybody agrees, you need to buy it or hold it. Um, and so you reach peak valuations. But if you're in a market sentiment like today with Tesla, where people, well, are doubtful whether they should keep it or not, like for example, let's look at Reddit at Tesla Investors Club is a very good forum, and let's see what people are saying. About buying or selling. This someone is boosting that they invested 4k in options, now is now worth 400k. Of course, that's bearish. um, mm, this, for example, is someone who's considering to sell and keeping trimming it down. Yeah, I don't see so much actually bearish. I doubters, sellers here. This is a seller thinking out loud. Where is the local maximum? Is making the case that like, there should be correction somewhere. Maybe it's smart to sell. Um, but there's another, I think, very bullish thing, and that is the amount of shorts still in the market for Tesla. This is good on Twitter. Ihor Dusaniewski. There's great reports on short, outstanding shorts, and you can see that it's still 28 million shares shorted, but there's only 170 million, and maybe half of that is trading in the market, or maybe 100 million or 110 million or so are trading in the market. The other ones are privately held. But 30 million shares are shorted still today. That's a lot. Of course, it was much higher at the bottom here when the price went from 300 to $180. You had a gigantic short interest of about 42 million shares shorted. It has gone down a lot from 40 million to 30 million, but 30 million is still huge if you look at other shares. Like, these are very a huge short position, and it will be liquidated, all of them. Like, usually look at a share like Amazon or Google or Apple, like, no shorters. There is no short interest. They're like very low, maybe 1% of outstanding stocks. This is how much? 30% of outstanding stocks. So that's huge still. And so short squeeze, there is still a lot of buying pressure to be expected from these shorts closing their positions. Because for that, they have to actually buy the Tesla stock to give it back from those that they borrowed it from and sold it in the market. And there's also, of course, the pressure from the S&P 500. The inclusion, Tesla is very likely going to be included in the S&P 500. And that also causes some, well, buying pressure. Huh? Yeah. Because the moment it gets included, many people want to buy it because many people follow the S&P 500 index, and so whatever the S&P 500 decides to include, they will buy. But going back to this thread here, of course, you have to also look at the news. For example, on Yahoo.finance, what's the news about Tesla? Tesla stock went up a lot, but is the market euphoric? That's the question. Let's look at the headlines. Okay, it's valued highly, yeah. Is what they say basically, what's going on here? Why is this popping away? I caught it. Well, it's not even about Tesla anymore. Tesla stock meteoric rally comes to a halt. They call it a meteoric rally already. It's not a meteoric rally already. It's double the value it's been for 5 years. A big fan downgraded the stock. A fund hates Tesla. So you see, this is not euphoric. These are not euphoric news articles, which you typically have at tops. Let's go back to here, Tesla Investor Club. Huh? So they're just talking about the past here. Yeah, Morgan Stanley predicted $10. At $180, Morgan Stanley predicts $10 Tesla price. That's unbelievable. These investment houses never listen to these guys. They really, it's like they do it on purpose, to put people on the wrong foot. They trade against their own news articles, I think. But 5 things Tesla bears keep getting wrong about the stock. So people are really still fighting the bears. The bears are still hurt. I mean, when you have a market top, people at bears are hurt when prices are relatively low. Then their cases are really taken serious. But as prices go up, they are being like ridiculed and laughed, and then they're just like not being talked about anymore. The higher the price goes, people start to talk not about the bear cases but about the bull case, and they start to look instead of down, up. And so at the top, typically you will have articles about how high can it go. Will it go, if it's at 1k, so probably start articles, will it go to 10k? And you get a lot of bullish articles, bullish sentiment. Here people are still afraid of possible recession for Tesla. How will that impact the price? Okay, this is bullish. Bullish, of course, articles. You have that also. Yeah, so also interesting actually is the Tesla, the bonds are at face value now. I talked about those bonds. They actually will be converted into shares. So these are good investments in the long term, because you have the advantage of having a bond that you get paid out first. You can't make that many losses as with a share, but you also can convert them into shares in the future, if share price would go up, and thereby get all the gains, a little bit less gains, but most of the gains that shareholders also have. But the big problem with these bonds is you do have to wait it out. Huh? It's not like these bonds are now going even 20% higher than their face value. No, they are just at um, at full face value. Huh? So with a stock, for example, you have 100% gain pass off here. You bought this bond, you have only 20% gain. So that's not actually so interesting. That's why I also decided not to buy those, because you're much more stuck into the investment than with a share. Um, okay, so that's that. So yeah, if you want to sell, I would recommend to actually take just a margin loan against your stock. I do that. I do need to sell some shares sometimes because, well, I'm investing in crypto, and as prices go down, I want to buy crypto. So I do need to sell Tesla stock. But instead of selling Tesla stock, I actually don't sell it. I just take a margin loan against it, but I also protect myself by, um, so for example, let's say I have to sell 20% of my shares. Actually, I had to sell 20% of my shares when I was buying crypto, for example, around what was it? Let me check. For example, the first step here, when crypto did a golden retrace to about 210 billion market cap, it was, I raised my exposure from about 30% to about 40% crypto, and I had to pay that with selling Tesla. But instead of selling Tesla, that was around 70% market share of my portfolio, because all the rest is Tesla. Instead of selling Tesla, that means 30% crypto, 70% Tesla, I should sell actually from 70 to 60% Tesla, sell 10%, and with that 10% buy 10% crypto. But instead, I just take a margin loan of 10% against the Tesla, and I buy the crypto. And so I still have the 70% Tesla exposure, but I also have a minus 10% margin loan. And then I have also 40% crypto exposure. And then the Tesla, I remember, was around $230. It moved up to about $340, and then I decided to sell this piece, because the next step of crypto was already there, and crypto had again dropped from to 30% exposure, and I had to like raise it to 50% exposure. So now I had to do the same, but double as much. And so I did that. I took again a margin loan against the stock of not 10, but now 20% of the value of my total portfolio. And Tesla was again at 70%. So basically, I should sell Tesla down from 70% to 50%. But what I did was I didn't sell the shares, and I took a margin loan. Again, huh? But at the same time, I closed the previous margin loan that I did here, and I did sell then those shares, but at a higher price. Instead of selling them at 230, thanks to the margin loan, I was able to sell them at 340. Huh? So that's an extra profit. Huh? But it's a good system because you can set stop losses. Huh? You can actually, as the price moves up, always, like for example, now I have about 20% margin loan against of my total portfolio. I have about 70% Tesla, I have about minus 20% margin loan, and about 50% crypto. Huh? So, but I have a stop loss because this can go wrong, of course. Huh? Basically, I bought crypto with Tesla gains, but I didn't really sell the Tesla. So what happens if Tesla drops through the floor again? Then actually I bought something that I could not actually afford because the Tesla value is gone. And now I'm stuck with a margin loan that I can't pay with my Tesla. And yeah, I'm in trouble. Huh? So in order to avoid that, I do set a stop loss. So for this new loan, for example, my stop loss, I had set it at $250, $260. The price was about $340 then. Huh? So if the price would like go down below $250, I would automatically sell that Tesla stock and make sure that my margin loan is paid down before it goes deeper, huh? The Tesla value. But in the meantime, I'm lucky to see Tesla go up from 330 to almost $500 today. So what I can do now is raise that stop loss from the current 250 to 350 say dollars. And so if Tesla would correct from the current $500 to $350, only then I would sell the stock to make sure I'm not stuck with a margin loan. But you can like always increase that stop loss and thereby making extra profits thanks to not selling the stock but taking out a margin loan against it. That's a very good strategy that I will also try to apply in crypto, because it's when something is in a strong bull market, you really underestimate how high it can go and how quick that can go also, and especially in crypto. And so you end up really making a lot more profit by not selling it but taking a margin loan against it. You can do that, for example, on Kraken for crypto. But for crypto, you can these days even do it with smart contracts with Ethereum, for example. Ethereum is very popular there, like it's really starting to pick up. They, I don't know, it's about 30 billion or so. That's already 3 billion in smart contracts. It's probably 3 billion stuck in smart contracts there, but this is for the most part um, because people take out margin loans against their Ethereum. That's a good approach. Instead of selling crypto, if you have to sell it, take a margin loan against it and put a stop loss. Especially, of course, when you're at low valuations. But of course, it's a little bit dangerous with crypto because actually there the price actually can go down still, and actually it's likely, and so that can really hurt. The best time to apply this strategy is when there is a clear uptrend, as is the case with Tesla. I think the most difficult question to answer is to people that have not bought Tesla and they want to buy now. For me, that's very difficult because that's not my investment strategy. I don't do that. I don't do that when I have like saw an opportunity and chasing away, and then I made the mistake not to buy, and then later I do buy. Like for me, that's like it makes rational sense, of course, if you're like convinced it's gonna go to $2,000 to do that. For example, at $500, but for me, I find I really don't like to buy that way. I prefer to buy when prices are going down and market sentiment is negative. You can't say that anymore that market sentiment is negative for Tesla, no, but I would more call it like neutral. And people are surprised that it has gone up. They didn't expect it has gone up, but it's more like, yeah, but yeah. So that's a little bit the problem. Actually, you should not ask that to me. You should ask that to a technical trader because that is their investment strategy. They will not buy as prices go down and market sentiment is negative. No, they only buy when something has broken out, is in a clear upward trend, and then and so yeah, you should probably ask those people if that's a wise thing to do. So very happy. This is panning out for me. This investment. Uh, it's a double-edged sword for me because actually I took leverage of almost three on Tesla around the bottom here, and I sold it all off. So I had a lot more shares actually. I could have made a lot more money, but and I still have that voice inside of me every every week at least that say, Mark, what the why the fuck did you sell that off? But then I always reply, yeah. And what if it would have gone down here? Like from instead of like shooting up, it shoots a little bit more down and it goes from like 120, while indeed crypto goes down too. Well, instead of like I would be wiped. I would have really lost a lot of. It was about 50% of my portfolio with a leverage of three. I would have left maybe 10 or 20%. Like you have huge losses then also, and so that means I couldn't really buy crypto. That you have to look at both scenarios. But yeah, this also is on my mind often. But and that's why I think it's the first time I experienced that like leverage is really a dangerous instrument. It's a little bit like cocaine or Coca Cola or it's really or coffee or just alcohol. It's really something that gives you a lot of extra volatility and extra excitement but and I can imagine this is addictive and it's a very dangerous instrument um, because yeah, it's like when you're super bullish about something or super bearish about something, you really I really have that part in me that says, come on, let's go, let's go all out here, take whatever margin loans we can get and go for it. But that's really how you get wiped out, huh? How you can really lose a lot of money. And yeah, I was very close to that. Can make a lot, but also lose a lot. And I don't think it's good. Yeah. Um, so yeah, I hope this continues and crypto at the same time goes down. I made a video today that I think it is likely to continue go down, and that I can continue to build my crypto stash thanks to Tesla going up. That would be absolutely amazing. Thanks for watching, guys, and good luck in the markets.